and welcome to Zee Commodity Capsule. Let's start with gold prices, which have managed to inch higher, but they continue to hover below the key $4,200 an ounce mark. Primary reason is, of course, the yellow metal has some support from the dollar, which has weakened, particularly now that the weakness in dollar has extended to 0.4% for the week. It is aiding the strength in the metal price. But having said so, gold futures are facing the cap in its strength because of the waning bets on December interest rate cuts by Federal Reserve. Now, what has really happened is that the US government officials on Thursday suggested that they may never be able to release the inflation and labor prints for October due to shutdown. Because of this, we have seen markets are now pricing in less than 50% of chance for a 25 bips cut by Fed, down sharply from a 65% chance which was being seen last week. Oil prices, meanwhile, have risen by nearly 2% on Friday after a Ukrainian drone attack damaged an oil depot in the Russian Black Sea port. Brent crude prices are hovering just above $64 a barrel. Having said so, we have seen that US imposed sanctions on Russian oil companies Lukoil and Rosneft as a part of the efforts to bring Kremlin to peace talks over Ukraine. But the gains are being capped because 1.4 million barrels per day of Russian oil is being added to oil being held in tankers as unloading slows due to the US sanctions. Meanwhile, Malaysian palm oil futures once again fell on Friday. It's hovering very close to its recent 4 to 5 month lows, and the market is poised for a fifth weekly decline as weak demand in November, a firm ringgit and anticipated high inventories are pressurizing the markets. Palm oil on Bursa Malaysia exchange is hovering very close to 4100 Malaysian ringgit a ton, and the contract has slipped slightly 0.15% for the week. Basically, we have seen that Malaysia's production is expected to surpass 20 million tons for the first time in 25. Along with this, Malaysia's palm oil stocks have risen for 8th consecutive month to 6.5-year high by the end of October. Last but not the least, copper. Copper prices we have seen have once again retreated on Friday, and it's hovering very close to the $10,900 a ton mark. And you can say that the retreat has come after a 4-session winning run as a slew of weak China data raised some demand concerns, while investors awaited the release of delayed US data in order to gauge the health of the world's largest economy. China's industrial output grew by 4.9% YOY in October, and retail sales rose by nearly 2.9%, both being the slowest in more than a year, while the new home sales have also slipped by nearly 0.5% on month-on-month basis, which happens to be its steepest performance since October 2020.